Coming up on Market to Market, what's in a label? Congress misses a deadline over GMOs. North American leaders take disparaging comments on trade policy in stride. And bridging the gap between rural and urban America via the tourist trail. Those stories and market analysis with Naomi Blohm next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, July 1 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. As the conscious uncoupling between Britain and the EU plays out, the world economy has tried to move on and see other countries. The Dow Jones regained much of last week's losses and flirted with 18,000. And Britain's main index, the FTSE 100, is back above pre-Brexit levels. Domestic shoppers were feeling better about the immediate future. Last month, consumer confidence grew to its highest level since October. The bravado fueled a springtime shopping spree, pushing consumer spending up 0.4% in May. However, according to the Commerce Department, the economy grew at a paltry pace in the first quarter of the year. Drivers heading to their July 4th holiday destinations will find savings at the pump. AAA reports gas prices are at their lowest levels for this time of year since 2005. And if your road trip takes you to Vermont this weekend, you'll be entering a state that stepped first into the foray of requiring labeling on food containing genetically modified organisms. But for how long remains the question. The Senate is scheduled to vote Wednesday on a bill that would trump the Granite State's efforts. Peter Tubbs reports.
A first-in-the-nation Vermont law requiring the labeling of food products with GMO ingredients went into effect Friday, causing more than just a ripple through the food industry. The measures signed into law during the 2014 legislative session requires food processors to label the packaging of products that contain more than 1% of ingredients altered using methods not considered conventional. The landmark legislation requires labels declaring the presence or lack of GMO ingredients to be easily found by consumers when examining the outside of the packaging. Independent groups are assisting manufacturers with certifying their products as GMO-free, but many companies are creating their own labels to meet the Vermont standard. The food industry estimates that 95% of packaged food in the United States contains GMO ingredients, which would place GMO labels on virtually every product on grocery shelves. Food industry officials are concerned the randomness of the supply chain could accidentally put them in violation of the Vermont law. A brand may unknowingly have their products distributed in Vermont by third parties. The new law may cause smaller brands to drop their products from wholesalers in the Northeast to remove any chance of accidental distribution in the Green Mountain State. Legal experts view the Vermont law as a collective rather than individual threat to the food industry.
What you see with any of these types of state legislation or state laws that impact a nationwide group of, say, manufacturers, is you end up with a patchwork of regulation. And so manufacturers are like, okay, so maybe you're going to regulate us, that's fine, but we need to have a consistent standard. We need to not have to follow 50 different laws. That will drive us out of business.
The labeling process is complicated by different regulatory jurisdictions. The FDA oversees most food products, while the USDA covers meat, poultry, fish, and eggs. Labeling rules would generally cover FDA-supervised products only, for example, allowing meat producers to voluntarily label their products as non-GMO, even if livestock feed contained GMO ingredients. Vermont Attorney General William Sorrell has announced enforcement of the new law will begin in early 2017 to allow suppliers and retailers a chance to clear unlabeled products from their shelves. The enforcement delay also will allow Congress time to craft a national labeling bill.
I would expect come September, when the Senate reconvenes, that this would be high on the priority list to get something passed that would be a nationwide standard.
The United States Senate worked on a bill this week that could supersede the Vermont law. The House passed a different bill addressing labeling in 2015. No action is expected until Congress returns to work after the July 4th holiday recess. For Market to Market, I'm Peter Tubbs.
Congress is just 9 working days from a 51-day weekend. The House of Representatives was in session for half of June, while the Senate gavelled in for 18 days to conduct the people's business. Pressing bills on the to-do lists of leadership involve GMOs, the Zika virus, and gun control. Unlikely to be completed in the shortened session is a vote on the Trans-Pacific Partnership, or TPP. That didn't stop the president from entering into a summit with his trade brothers to the north and south of our borders. John Torpy reports.
Burgeoning possibilities for the shipping industry opened up this week as Panama christened its newly expanded locks, ushering in more opportunities in growing global markets. Amid fireworks and fanfare, a Chinese ship carrying more than 9,000 containers entered the locks to officially open the expanded canal. At a cost of just over $5 billion, the new locks are expected to double the canal's capacity and accommodate ships that carry up to 3 times the cargo of those previously able to use the canal.
How are you? You doing good? Very well. You doing good. Thanks.
As trading trails were widening in Central America, 3 of the world's economic powers were meeting in the Great White North. This week, the leaders of the United States, Canada, and Mexico met to reaffirm each country's cooperation on trade during the North American Leaders Summit in Ottawa.
Jobs are created, companies are incorporated, trade is free, and more development can reach people due to regional integration. Isolationism is not a route towards progress.
According to government data, the United States, the world's largest single economy, had more than $1 trillion worth of trade with its 2 major trading partners. At the meeting, President Obama pledged to keep working on the Trans-Pacific Partnership. The 12-nation agreement, which counts Canada and Mexico among its members, is stalled in the U.S. Congress. Both presumptive presidential nominees have spoken out against the TPP. Donald Trump took exception to the trade pacts with Mexico at a speech in western Pennsylvania earlier this week.
But our workers' loyalty was repaid, you know it better than anybody, with total betrayal. Our politicians have aggressively pursued a policy of globalization, moving our jobs, our wealth, and our factories to Mexico and overseas.
For Market to Market, I'm John Torpy.
A judge ordered a New York farmer this week to stop using eggshells as fertilizer after neighboring businesses complained the odor and flies drove away customers. Lively debates between rural and urban dwellers are nothing new. And as producer Josh Bittner discovered, bridging the gap goes beyond farmers deciding not to spread manure when their city neighbors are having a wedding reception. The idea has created a role for agricultural ambassadors trying to lift the veil on rural life.
Last year, Iowa's largest drinking water provider sued farm drainage districts in 3 counties upstream. As trial awaits in 2017, Des Moines Water Works has alleged excess nitrate runoff from farm fertilizers plagues efforts to comply with federal guidelines for safe drinking water. The utility claims cleaning the surface waters of the Raccoon River for 500,000 ratepayers in the capital city vicinity has become an increasingly difficult and expensive task.
We're very confident that these are clear point source groundwater polluters that are coming from agricultural use.
Ultimately, the case could redefine and broaden government jurisdiction over waters of the United States, a prospect feared by many in farm country.
I'm not sure a lot of people in Iowa even knew where Calhoun County was before this lawsuit.
Various producers, commodity groups, and politicians at the local and national level have called for widespread voluntary adoption of conservation methods to ward off new legislation. But farmer and author Darcy Malsby, who traces her lineage to a century farm near the small town of Yetter in one of the counties named in the lawsuit, hopes a dose of rural hospitality could help mend fences.
I'd noticed this growing trend towards this rift between rural Iowa and urban Iowa, and that really troubled me.
Malsby envisioned a journey, bringing farm and city stakeholders together to help elevate the level of discourse. And after partnering with local nonprofit Iowa Food and Family Project, the Iowa Soybean Association, and several other food industry groups, tourists of diverse backgrounds loaded up in Des Moines early one summer morning for the maiden voyage of Expedition Yetter.
A lot of people think Iowa's flat, but if you look a little closer, it really isn't. It has a lot of undulation to the landscape.
Factoids about rural America were sprinkled throughout the bus ride.
You will find that soybean oil is the #1 ingredient in your Hellmann's mayonnaise. The soybeans that are grown that produce the oil for that product are sourced from a 60-mile radius around Des Moines, Iowa. Welcome. How are you? Thanks for coming on board.
The first stop on the tour was Bruce Wessling's family farm outside Grand Junction.
We believe in what we do and we consume the products that we raise, and I don't want other people to feel safe doing the same thing.
Wessling shared the intricacies of his row crop and pig operations, explaining how manure management plans help livestock owners safeguard against health concerns and abide by natural resource regulations.
You know, I feel like our operation's kind of a complete circle from growing the corn, feeding the livestock, putting the nutrients back on the soil.
Former University of Iowa and NFL quarterback Chuck Long hitched a ride as well. He marveled at the culmination of knowledge found on today's farms.
It's just fascinating what, with technology now and the machinery that they use, how streamlined and precise they can get.
Nostalgia sprouted for one Sioux City school teacher who shared family memories of hard work.
My dad did farm drainage tiling a long time ago in the 80s, and so there was no GPS then, and I helped him quite a bit.
We have this underground drainage system.
Agri-tourism ventures like Expedition Yetter have grown in popularity over recent years. According to USDA's 2012 Census of Agriculture, more than 33,000 farms integrated tourism and recreational services into their repertoire. As of the last available figures, activities like winery tours, hay rides, hunting, and fishing represent over $700 million in annual revenue for enterprising American landowners, a nearly $150 million increase over 2007's Ag Census numbers. So far, the largest returns have come mostly in western states, which earned revenues of up to $24 million in certain counties. By contrast, Iowa tops out annually around $350,000. But again, USDA figures are now several years old. Organizers like Malsby see more opportunities for migrations through the countryside, citing the demand for reconciliation of rural and urban issues.
If you think about it, the air that we're breathing is 78% nitrogen. Those plants will take that nitrogen out of the air, fix it, and use it to help their own growth.
Rounding out the jaunt, bus riders visited David Osberger's 1,700-acre corn and soybean operation near Jefferson. A fourth-generation producer, Osberger and his family have practiced no-till farming for decades to minimize erosion.
And I'm really conscientious about soil compaction.
Osberger has converted unproductive land to wetland habitat, added buffer strips, and cover crops. He says the approach benefits nature and future farm generations, but admits it takes a strong level of commitment to stay on track.
So it's a whole systems approach, and it's not something that you go into lightly.
As farmers attempt to chip away at looming litigation with voluntary efforts, many agree time is the most precious commodity of all. Farm community members say there are no quick fixes for ever-present nitrates in Corn Belt creeks and streams. And if Des Moines Waterworks should win, farming could go under a regulatory microscope. But some see the benefits of a spotlight shining on Iowa agriculture.
In a way, I'm glad that the lawsuit has put the attention on agriculture because we can show how complex this whole water quality issue is. We're happy to open up the barn door and invite people in. Yay! We're all Iowans, we're all in this together.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market Report.
With Brexit in the rearview mirror, this week it was the U.S. government conducting the wild ride in the commodity markets. The USDA's acreage survey surprised many and was bearish for grains. For the week, September wheat dropped 35 cents as the nearby contract was a loser for the fourth straight week, while the September corn contract has plunged 18% in 2 weeks to close 29 cents lower. Thursday's reports contributed to volatility in the soy complex, which helped erase last week's massive loss with a 63-cent gain. August meal came along for the ride to push $27.60 higher. In the softs, July cotton gained 57 cents per hundredweight. Over in the dairy parlor, August Class 3 milk futures added 6 cents. In the livestock sector, the August cattle contract improved $2.10, August feeders expanded $3, and the July lean hog contract weakened $1.02. In the currency markets, the U.S. dollar index moved 14 points higher. Crude oil added $1.35 per barrel. Investors kept going for gold as the August COMEX price gained $16.60 per ounce. And the Goldman Sachs Commodity Index broadened 8 points to finish the week at 377 even. Here now to lend us her insight on these and other trends is one of our regular market analysts, Naomi Blohm. Welcome back, Naomi.
Thank you.
Tough week in the wheat market. The trajectory we are on here, where's the bottom?
I think we're there, is the good news. Technically speaking, the wheat market has achieved its downside projected point. The USDA report this week did us no good. It increased the planted acres way more than what people thought. And if you take that along with the really good yields that we've been having, the ending stocks are swelling over to over 1 billion bushels. And so just all of that bearish sentiment is what made the market plunge lower this week. But keep in mind, seasonally, there's a little bit of a bounce here that happens in the July timeframe. And on a technical correction, I'm looking for both the Kansas wheat and Chicago wheat to probably bounce anywhere from 20 to 30 cents. But that's probably as good as it's going to get because the fundamentals continue to be so negative.
Okay, and even in the seasonality with yields in Kansas and Oklahoma, 100 plus bushel per acre in some cases, can we still expect to see that kind of a factor take hold?
I think you'll see it from a technical standpoint, especially if the weather is maybe getting a little bit drier, which would affect the soybean market and the corn market. So if we see that, the wheat will kind of follow tail and get that corrective bounce, but it's going to be a selling opportunity.
Okay. Speaking of corrective bounces, 29 cents down in this corn market. You got a technical bounce in the in sight for us?
Well, the corn market tested the major support level from late March and early April at $3.65. That should hold for a while. The USDA surprised us all this week by increasing the planted acres by 0.5 million acres, and it was such a big surprise that's what made the market push lower. And they increased the quarterly stocks number too, which was another surprise. So what you have right now is a market assuming tremendous yield. We're still factoring in 168. And so where we are at now for prices at 365 is equivalent to the ending stocks being back over 2 billion bushels. If we come back from the 3-day holiday weekend, and if the rains that are supposed to be happening this weekend over the parts of dry Missouri and dry Illinois and Indiana, if those don't materialize like they thought, or if the weather forecast is for really dismal, dry, and hot for the rest of July, that in and of itself will allow for a corrective bounce. What kind of a bounce should you be looking for? 395 September futures. So, and probably that 395, almost $4 area with on the December futures as well. Don't bank on $4 futures. It probably won't get there, but it'll get close. But that is your opportunity for catch-up sales. And for the market to turn around substantially, we would have to have the perception that yield is less than 163, because that would be what's needed to get the ending stocks low enough to get the market price higher than $4. But this USDA report just was the nail in the coffin.
Okay, so it's weather, weather, weather is what we're trading from now until harvest.
Yes, yes.
Okay, keep an eye on those forecasts and don't keep your fingers crossed for $4. Right. Given that we're going to be making some sales sub $4, are you advising physical sales, or should we be selling futures at $3.95? Should we be buying calls to offset. What are your thoughts on marketing that corn?
Well, I would say if you've got old crop, this is going to be your last chance to clear out your bins. So you just got to do what you got to do in your cash market. If you wanted to take a stab at reowning, then I would say you could try the call options, because usually we do get a seasonal bounce here in July based on weather. But again, we're only looking for a 30, maybe 40-cent rally at the most, and so you're only going to get 15 to 20 cents on a call option. So just keep that in mind. But I would say on the rally forward contract for your new crop as well, maybe a hedge to arrive.
Okay. Well, let's talk soybeans. The star of the show this week, big rally. I've got a question to start off this from one of our followers on Twitter. This is from Jeremy in Lanark, Illinois. He's asking, how far can we rally and not hurt the demand side of the balance sheet?
That's a good question. I would say how far we could rally in terms of price before demand is affected would probably be $12.50 to $13. Do we have any reason for that to happen? No, we don't. The thing with soybeans is that the demand is so strong in general all over the world right now that the demand is what allowed that rally to happen yesterday. Even though the USDA increased the acres by 1.5 million acres, the reason for the rally is because of how important, again, the weather is coming up. Because if we take the yield at 46.7 with the numbers that the USDA gave us, that puts ending stocks at 333 million bushels. That's kind of a negative number. But if the weather is hot and dry and we drop just down to 44.4 on yield, so just a slight reduction, that puts ending stocks at like 143 million bushels. That's a totally different ballgame. So weather is really important right now, and the demand in general is so strong that I don't think we have any sort of a demand destruction in the short term, because it's just so strong right now.
Are we still talking possibility of La Nina as we push into August?
That's the latest that I've heard. It's continued to be there. I haven't heard anything different. And so I think that's also the reason why the traders kept the market up. They were thankful it wasn't a 2 to 3 million acre increase, and they're very mindful that the weather forecasts are saying more of a hot and dry La Nina for August for sure.
Okay. As a producer, am I selling this rally or am I holding back and watching for 12?
You're cleaning out your bins on this rally, period.
Okay.
You need to, because if the weather is fine, this is your last chance. I would also get more current with the cash sales, but just be mindful if for any reason we can get through that $11.75 to $12 hurdle on the November price, the funds will stay in it and continue to get in it and push it a little higher. But the weather is the only thing that will make that happen.
Okay. Well, let's talk dairy. You're our native Wisconsinite. A lot of strength, relative strength here in the milk market recently. Can that continue?
I don't think it's going to continue much more, because the reason for the rally, we've got the prices up towards the $17 area, which was resistance from nearly a year ago, or I should say this winter, I guess. But the reason for the rally right now is the cheese demand has been so strong domestically. And the cheese price for the block barrel price is 40 cents higher than it was back in May. And domestic demand has been pushing this rally higher, along with news that some of the milk plants in Wisconsin, they're going to be cutting off any sort of BST hormone that has been in any milk. They're done with it at the beginning of 2016. So farmers are starting to, if they haven't already, and most have, but if they haven't, they got to quit that process. Our exports are still lagging. They're not strong. And so if we didn't have this cheese demand right now, we wouldn't have the prices that we have. So this is really a nice opportunity to get current with sales and be locking in some further hedges.
Okay, good time to throw some cheese on that burger and celebrate the 4th.
Absolutely.
Speaking of the burgers, live cattle up $2.10 this week on the board. Strength all coming off a bounce here. Can we keep running this thing?
I think we see the cattle market continue in the sideways trend that it's been in for 4 months. We had stronger cash sales. Our exports have actually been pretty decent for the past few weeks. Year-to-date exports are up 2% from year-ago levels, so that's encouraging. But just keep in mind, the market is aware that the herd is slowly rebuilding. There is a perception that the herd and production is going to be larger into third quarter. So what you have to be watching on cattle futures for the August and the October contract, as long as they can stay north of 110, you're fine. We're going to see more sideways trading. We don't have any reason for a big rally.
Okay.
But if demand destruction happens, and I think the biggest thing would be if China stops buying hogs, that saturates the market domestically with product that competes with the cattle, then that factor is what would make the market price go below 110, and that would lead to a technical washout pretty quick down to one even.
Oh, wow,
much.
okay. So that would happen very fast.
Yes.
All right, feeder cattle, real quick, up or down in this next week?
More sideways, just like the live cattle.
Lean hogs, you talked about China's buying. We've seen lean hogs show incredible strength for the past 6 months. Step back a buck this week. Are we just getting toppy, or are we starting to correct here to the downside?
It was a correction from the short-term move higher that we had. The August contract got up to 90. It needed to kind of simmer down and come back to reality. Cash markets had cooled a little bit. The cutouts had cooled down a little bit as well. But at this 82 level for the August contract, that's a really nice area. And again, we have to continue to see the Chinese demand. That's what's keeping this market higher. If there's any wavering sense that that's leaving, the market price will work lower. But for the short term, I'm looking just like the cattle market, sideways trading from here probably for another month for sure.
Okay. Are you going to take advantage of these higher deferred prices to make some sales out there?
That's actually a great question. I think I would, just because the perception, again, also is that the slaughter numbers work higher into the third and fourth quarter. So any opportunities that you have for some sales, it might be a good idea because production is plentiful.
Still weights are pretty well in line. We're not seeing a lot of growth.
Yeah, I haven't heard too much there regarding that. It seems like it's pretty much in line with projections and year-ago levels. Things are just current. So no big supply issues coming down the road, so make sure we're taking advantage of the rallies when you see them.
All right, take advantage of the rallies. That's right, sell when you can. All right, well, Naomi Blohm, thanks so much for joining us this week.
Yeah, thank you.
That wraps up the broadcast portion of Market to Market, but Naomi and I will keep the market conversation going, including answering more of your questions during Market Plus, which is available on our website. And while you're there, check out MTOM. It's the newest podcast offering from the producers here at Market to Market. Listen as we go beyond the headlines to hear about upcoming stories and learn more about our market analysts. And join us again next week when we learn how American pork is finding fans in the Japanese market. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.